Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market site, we have Bill Capuzzi, CEO of Apex Fintech Solutions, Ben Haber, CEO of Monark Markets, Viram Shah, CEO of Vested Finance, and Dave Gompert, CEO of Avant-Garde Trading Securities. We're here to discuss the expansion of private market access for retail investors. It's great to have all of you with us. Welcome to Trade Talks. Before we get into the conversation, Bill, let's start with you and get a sense for the ecosystem at the table today. Give us a brief background on Apex Fintech.
Yeah, so thanks first for having us. Apex is effectively a retail investing platform, purely B2B. We have roughly 300 different customers that leverage Apex. We support about 25 million retail investors from about 175 different countries. And we custody, at the core, roughly $250 billion in assets.
Yeah, and Ben, Monarch is more within the infrastructure here.
We are, yeah. Thank you for having us, and good to see everybody. Monarch's a B2B API infrastructure, bringing private markets into the traditional retail brokerage and wealth management world.
And tell us about Vested, Viram.
Yeah, so we basically allow Indian investors living in India or globally access international assets which they did not have access to, which was started with US stocks, but now increasingly private markets as well.
Yeah, and tell us about Avant-Garde, Dave.
Sure, again, thanks for having us. We're an online retail brokerage firm offering access to multiple asset classes, futures, crypto, stocks, options. Our bread and butter is equities and options. And that's why we're really excited to be here today, because offering services like Monarch to our customers just expands our reach.
Yeah, and Dave, certainly the companies are staying private for longer, right? Why do you think that is?
Well, I believe it's due to the regulatory environment. And when you go public, you now have to file a quarterly report card, whereas when you're a private enterprise, you file once a year. So I believe that the costs for being compliant discourage a lot of well-funded private companies from going public.
Yeah.
They don't need the capital, then why take on the headache?
Yeah, and Bill, many of these companies are what investors are looking to get exposure to.
Yeah. I mean, look, we've filed our S1 a couple times as Apex. And I think I'll just add on to what you had said, which is why haven't we gone public? One is the cost, you said. So it's not just the regulatory burden. There's also a discount, right? Effectively, right now, the market's price in roughly 20 to 25% discount just for the privilege of going public. So if you're a quality company, why would you give up 25% of your company, right? Just for the fact of doing that. I think it ties into the private markets that we're going to talk about, which is there's now much better alternatives for a private company to stay private, right? Historically, you wanted to raise money, effectively you got to a place, you were so large, really the only option was to go public. Today there's options, there's money, there's capital that doesn't have to require you to go public.
Yeah, and the infrastructure is what makes this accessible as well.
Absolutely. I mean, to put some numbers to what Bill was touching on, 87% of companies today doing over $100 million in revenue are private companies. So this is not just a niche trend focused on AI or any one individual stock. This is a transformational shift in how capital markets function and how companies are looking to raise money over time. Certainly the infrastructure historically has not existed to bring private markets to retail investors in an efficient way, and that's a huge part of what we're solving for with Monarch, and the reason we started the company.
Yeah, and of course, retail investors are excited to get involved pre-IPO.
Yeah, we are seeing the demand, across the world, in fact, not just in the US, internationally also folks want access to these companies because they're massive companies. They're sometimes larger than, public companies. So they use them on a daily basis and they want to invest in them, but they can't. And that's what we now are able to solve with technology that Monarch Apex are building, that we're able to give them access at a much lower cost.
Let's go back to private companies and how they're thinking about liquidity and the value of an IPO or the lack thereof.
For sure. I think companies today have a number of other options, alternatives to going public, to raise capital and provide liquidity to employees and early shareholders. So tender offers, I know Nasdaq Private Markets runs a large business in the tender offer space, is a great example of company-sponsored liquidity events that allow early stage employees and investors to sell their shares into the secondary market. of course, direct secondaries as well, or providing liquidity to late-stage companies. And then, Bill touched on it, there's just a tremendous amount of more capital in private markets that are investing not just in private companies, but also in assets like infrastructure, in the private credit space. And so the combination of those forces are really what's led to really forced the development of a more robust private market infrastructure. And it's something that we see being a very long-term trend that we're really in the early days of today.
Yeah, and I think, Bill, we should take a step back for a moment here and discern private markets, alternative investments, because they sometimes get looped or put under one umbrella.
Yeah. Look, roughly speaking, think of anything private, anything that's IPO, think of it as a public market, anything that, alts, private markets, sort of synonymous terms used. And the reality is, and I'll just, touch upon, what the other folks have talked about is, you have, retail customers today don't really have access, right? Just think about mom and pop retail, right? It's really something that's been tilted to the rich. Right, there's this notion of an accredited investor that provides you the ability to actually invest in an alt or a private security, and the reality is that is based upon how much money, by and large, you have. Right, the definition of an accredited investor is, by and large, how much money do you have? Right, investable assets, and I think there's a lot of room. We talk about all the companies that are potentially available for retail investors. I think there's a lot of room for us to expand beyond just the notion of how a credit investor works today. There's a lot of work, companies like Apex and others, talking with the SEC about how to change those rules so that we can lower the barriers to allow mom and pop, retail investors access to something that has historically been really for rich folks.
And David, Avant-Garde, I mean, you're specializing in sophisticated traders and options, so I'm sure they're excited to get exposure to these types of assets and something beyond the public markets.
Very much so. And we've fielded several calls from customers looking for that. The demand on our side is there. Right. But like Bill touched on, the accredited investor space, I can't explain it better than he did. He did a wonderful job. It's all based on money, not expertise or knowledge. Right. And it's something that I'm kind of passionate about too, because there are a lot of great, people that are very knowledgeable. The information today is so much greater now. I don't understand why an investor of mine can't buy, for example, pre-IPO SpaceX, but as soon as it launches, buy as many shares as he wants, as soon as it IPOs. So I applaud people like Ben and especially Bill leading that charge with the SEC to get that at least reviewed. Yeah. Because that would really increase demand on our side.
Yeah, and certainly if there's demand, the product will come. Mm-hmm. That's what clients are looking for, and you're seeing that not even in just Indian markets, but globally as well. Investors are looking for this type of exposure.
Yeah, and it's varied exposure. So in terms of all private companies, but eventually they want other opportunities as well, just not pre-IPO, maybe even early stage companies, maybe even other assets in real estate, etc. So there's demand for all of alts, largely everything non-public. People want to be able to invest into now.
So let's understand the ecosystem here for an example. How do you all work together, right, to get access to these types of investors, provide the technology, the infrastructure, the brokerage, and so forth? What does this ecosystem look like?
For sure. So I think the historical context is important with regards to retail access to private markets. The last 10 years or so, you've seen a lot of direct-to-consumer platforms emerge to try to provide access to different asset classes, and pre-IPO has certainly been at the front of that list and proving out that there's a lot of retail demand to access private markets in general. I think the innovation that we're working on at Monark and working with partners like Apex, Invested, and Avant-Garde to execute on is actually bringing private markets inside an investor's existing brokerage account and existing brokerage platform so that private assets can sit right alongside your public equities, your fixed income investments, and you don't have to find a new platform to access the same assets that you can access in a direct-to-consumer format within private markets today. So I think that's really the unique innovation and certainly is going to broaden access to a much larger set of end investors because it's reaching them where they do their investing today.
Yeah, and then Bill, of course, once this opportunity is available for new products and access to the private markets, there's other products that can be derived off of this as well.
Yeah, and so back to your original question, I'll tie into the part around the other products. you think about the folks that are at this table. You have the B2C side of things, right? So their job is to take our APIs and expose them out to that end customer, right? And then attract that end customer to their platform. Apex sits in the middle. We're effectively that platform that allows for, as you said, whether it's equities, options, futures, fixed income, crypto, now private securities, hold them under one brokerage account, right? But the world of alts it's like herding cats. Like, probably the best way to describe it. There's, as you said, there's private securities, there's there's wine, there's real estate, there's all kinds of different alt categories. Art, right? And so effectively, how do you actually herd those cats? Create some standardization around how a retail investor get access. That's the partnership with Monarch. So what they've done is they've gone out and said, hey, we're going to help standardize, normalize how you get access to these alts. What is the process, that subscription documentation? How do you actually interact with that SPV, what's called an SPV, and make that standard, right? Then they plug their APIs into us. We then kind of create it as part of a broader brokerage platform, hand it to our friends on the B2C side, and then they'll go to the end customer. And I think what Ben said, just to double click on, that versus what happens today is you have an advisor. The advisor has all of the assets of you, the customer, sitting on their platform. If you want access to private securities, it's kind of like an up, over, and down. Meaning they have to introduce that customer, you the retail customer, to another platform, ICAP or a case, which is just a disjointed solution and doesn't actually aggregate the assets. And what ends up happening is just an odd, peculiar sort of interaction for that end customer, which is they've got multiple accounts, they've got multiple statements, they have multiple touch points, and I think the work that we're doing at this table is how do you bring that together? Obviously lower the barriers so that retail customers, not just accredited, can get access, but then the second part is make it simple. Make it such that you can click on a button, get the accreditation, get yourself accredited, and then access electronically all of the different alts that are out there, right? Provide transparency into how they're priced. Click on that alt that you want to purchase. We talked about OpenAI shares. Click on those shares, be able to see what the price is, and from that same brokerage account, move cash into that SPV and then show it on one consolidated statement. Like, that world doesn't exist today. That's the work that we're pushing on, especially myself and Ben, is like, how do you actually make it simpler for people to access? Right. Transparency, though, is really important because they're not, the illiquidity of an SP or of an alt is makes it such that you got to make sure you know what you're getting yourself into.
Yeah, and I'll get to that in just a moment here, but this is what Monarch is looking to solve for, are these core infrastructure challenges.
Absolutely. And I think to add on to Bill's points, once you have a foundational infrastructure on which private securities can trade and be offered broadly to sort of mass market retail, you can start to layer on more innovative products, right? You can introduce secondary trading and a secondary market where people can actually trade these securities. You could layer on derivative products, right? You can start to really, I think I've heard the alt space described as, public equities 20 years ago or maybe mutual funds 10 years ago. And if you think at where those two, sections of public markets are today, they're incredibly innovative. You have the options markets, right? The equity markets. And so those derivative products can build on each other once you have that foundational layer. But that foundational layer is really important to have in the first place, and that is what we've been focused on building and partnering with great folks to actually bring to market.
Yeah, and I think it's key what Bill had brought up as well, investors understanding what they're getting into. How are they owning this? Do the platforms own the underlying, or do they need to have direct access to it, right? You sometimes hear about these alt investments getting into wrappers, ETF wrappers as an example, and you kind of, that mindset where it's transparent, it's easy to get in and out of, but the liquidity profiles can be very different for some of these investments.
Yeah. So one, I'll just say that now that this entire infrastructure, once it comes together, we've seen it on the platform side of things, that once the journey is so simple and your SpaceX can sit next to Apple, people really love it. Like, we have had customers who've come and participate in our first, funds, talk about how it's magical to see now that they have access to SpaceX. So now that the infrastructure comes together, from a customer standpoint, it feels amazing. But to your point, the next layer then is how do you educate them on what is the right company, because right now it's just large companies and brands you've heard of. But eventually it will get into much more different kind of opportunities. And there, as a platform, we provide research reports, we help educate the customer, all of those things. But there's still a lot more that will need to be done after the access is solved for.
Yeah. Well, I mean, on your platform, you have sophisticated traders as well. And I'm sure this is something new that many of them have been exposed to. And understanding how they work, it's not quite as liquid.
Well, the lack of liquidity is something that we want to make sure we cover fully. And to be perfectly honest, I think the lack of liquidity a little bit is actually encouraging for a lot of investors. It forces them to look more long term. I would shudder to think that people want to start trading late stage IPO or whatever pre-IPO stocks and trade them like they would day trade Microsoft or something like that. I don't think that benefits anyone. But yeah, our investors, our customers definitely want access to this. They understand risk as in general. And I feel that offering access to these asset classes is just the next step. And to touch a little bit on the infrastructure side that Ben and Bill were talking about, consolidating all this under one brokerage account too, just from a tax reporting standpoint for the customer, the tax documents, whereas now they get documents from this place, that place, this place, and it's a nightmare for them. So being able to build that infrastructure where it's all simple, all in one place is humongous and a great advantage to our customers.
But I also think it's encouraging, to your point, that they are holding them longer term. The whole point of this is to get in earlier versus traditional access through an IPO. So they're thinking about this through a longer term lens, which I do think is encouraging. Viram, how is the experience different for international investors versus what U.S. investors have available?
Yeah, so I mean, one is just access to the asset class itself was not there in the US. Largely still, even if you had through broker transactions, you may have gotten access. But for international folks, till now, because there was no structure available, nobody could invest easily. So the access one is something that's difficult. The other is internationally, you have to move money to the US, right? And there are local regulations for all of the different countries. Like in India, there's different regulations. So you need local partners to be able to understand what is required in the domestic market, so that you don't violate any rules, but you can still get access to these companies. So there's a localization layer that's involved when it comes to international, but the demand is still very, very strong for US innovation, US companies that are pre-IPO.
Yeah. So Bill, when we think about this moving forward, how do you expect private markets to evolve over the next decade?
I think it's interesting. So we talked about let's start on the IPO market. I think it's starting to get better. It's opening back up a bit, but I think different than in the past. Today, private companies have alternatives that weren't there before. So I do think we'll see less companies going public, more companies staying private. Let's take Apex as a good example. There's alternatives today that are afforded to me that weren't there 10 years ago. So I think there'll be better dispersion between private and public. I think the challenge and the work that we're sort of been focused on is transparency is still poor, right? So let's use SpaceX shares, or OpenAI shares. The price that one broker has for the OpenAI shares and the price that a different broker has, they can be different prices. So I think one of the things Ben talked about is creating a market, right? Think about how the public markets have evolved. One of the biggest challenge here is, we talked about illiquidity. So, you have to actually understand what you're getting yourself into. The second is, what's the price you're entering at? And today, there's still a lot of opaqueness around, what is the true value of that OpenAI share? Where are you getting in, right? So great, you're getting in pre-IPO, but you may be getting in a price that IPOs, and so you're already off from where the IPO price is, right? You're way above what the IPO price is. So there's still a bunch of work just around creating better transparency for end customers. And then the last part is, this is the part that makes me a bit nervous about the space, is that there's supply looking for demand, right? And supply looking for demand.
Yeah.
And what I mean by that is you have a lot of big private equity firms, venture capital, that have these funds, have these things called SPVs, and they're looking now for new distribution channels, including retail, right? And there is definitely haves and have-nots in terms of performance of these SPVs. Right? And so there's a lot, and we talk about all the firms. You said 87%, which is crazy. I didn't know that that don't IPO, that are not public companies. But that doesn't mean all those companies are quality companies. And they're packaged up in this SPV. And so part of our job is we have a lot of work to do education-wise. So we're lowering the barriers, we're making it easier. The next is how do you create more transparency, and then how do you educate people?
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.